Let's start your investment journey.
Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 22nd of March. We have a quieter week ahead of us, which starts with PBOC interest rate decision and Fed's Chair Powell speech on Monday. On Tuesday, we should be on the lookout for UK unemployment rate and also Bank of Japan monetary policy meeting minutes. Going forward, UK CPI figures, Eurozone, UK and US manufacturing and services PMIs, and US durable goods in addition to the crude oil inventories will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for European Council meeting and US GDP Q4 figures in addition to jobless claims. The week will finish on Friday with UK retail sales for February and US Michigan consumer sentiment. Now, let's take a look at few markets. Let's start with the DAX or German 30 index in 4-hourly time frame. DAX is uptrending quite nicely, although it's pulling back from these current all-time highs. Key trading level from the intraday point of view is at 14,580, which is a shaded area here. Cluster of the previous highs, therefore resistance. Once broken, it becomes our newly found support. And also we have this rising support trend line here as well by connecting this sequence of higher lows. Bulls are in charge above that level, so they are looking for a push higher and a breakout above 14,700. Retest of that level from above could create a continuation of this upward bias, targeting additional resistance at 14,750, 14,800, possibly even higher. Therefore, new all-time high. Alternatively, if we see a rally and a rejection, or we see a gradual move and a loss, an end-of-day close below 14,580, that could trigger a deeper corrective pullback, potentially targeting additional support to the downside at 14,450, 14,380, 14,300 to the downside. This is Nasdaq. Nasdaq appears to be creating a rising wedge in fairly toppy market at the moment, so shoulder, head and shoulder here. This rising wedge overshot on the upsides above this falling resistance trend line, which is now support. Key trading level going forward is really at 13,100. So a rally into 13,100 or 13,070 and a rejection, or a gradual move lower and loss of these clusters of the lows here towards 12,630, 12,600 to the downside could trigger extension to the downside, potentially opening the way for the continuation of this selling pressure as indicated by overbought stochastics here and crossing over, targeting additional support to the downside initially at the cluster of these lows at 12,370, 12,200. Possibly a loss of that level could open the way for a deeper corrective move. Alternatively, pullback and a rally, or a rally and a breakout above 13,075 could open the way for the retest of additional resistance at 13,300. Cluster of these previous highs, breakout above that level, and an end of day close above 13,300 could trigger a short squeeze, therefore indicate an extension to the upside, targeting additional resistance at 13,560, possibly even higher. Euro dollar appears to be under pressure, capped by falling resistance trend line and multiple moving averages, so 2050 as well. Current price action appears to be capped at one spot 1980, one spot 20, so rally into that level and a rejection, or a gradual move lower and a loss of these current lows could open the way for the continuation of this selling pressure, targeting additional support at one spot 1850, one spot 18, 1750, possibly even one spot 17 to the downside. Alternatively, if you see a rally and a breakout above one spot 20, that could trigger extension to the upside, targeting additional resistance at 120.50, 1.21. Sterling dollar appears to be more bullish. Sterling dollar is supported by multiple trend lines here. The sterling is consolidating sideways, but coming to a very important support area. So bulls desperately need to hold this support down here at 138.30, 138, and a rally from here. In particular, breakouts above cluster of these previous highs at 1.40 and end of day close above 1.40 could open the way for the extension to the upside, targeting resistance at 141.50, 142, 42.50 on the upside. Alternatively, if we see a loss of 138.30, that could trigger extension to the downside, targeting additional support to the downside at 138, 137.50, possibly even 137. Dollar yen appears to be consolidating sideways in this intraday 4-hourly time frame. However, in daily time frame, it's creating the sequence of higher lows, although the current price is quite far away from the rising trend line and also rising 20 period moving average in end of day time frame. Key trading level going forward is at 108.60, pullback to 108.60 and a breakout higher or a rally from the current levels and a breakout above current swing high at 109.20 and end of day close above that level could trigger extension to the upside, targeting 108.60, 110, 110.80. Alternatively, a dip lower and an end of day close below 108.60 could trigger extension to the downside, targeting additional support towards 108. 107.50, 107 to the downside. Lastly, let's talk about gold. Gold appears to be creating an oversold bounce back. Key trading level for gold is at 17.20 to the downside. Pullback to that level and a rally or a rally from the current levels and a breakout above psychologically important 17.50, 175.0 level could open the way for the extension to the upside, targeting 1767, 1790, 1800, possibly even higher. Alternatively, if we see a rally and a rejection or a gradual move lower and an end of day close, in particular below 1718, that could trigger extension to the downside, targeting additional support at 1700, 1680, 1660. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.